This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, options trading program. And what we're really quickly going to talk about is some of the fundamentals of support and resistance technical analysis for options traders. If you like your technical analysis to be super complex, you like to have 8 or 9 indicators underneath your chart, you like to almost feel like you're flying a F-16 fighter pilot just for you to be able to evaluate your chart, this is not going to be the video for you. If you've been confused by a lot of other people trying to explain technical analysis to you because you feel like they made it overly complex, then this will be the video for you, because what I'm going to do is really break this down to its fundamentals and then give you like a fundamental platform that allows you to build up to where over time you can become more and more complex. However, you at this current time want to kind of understand this from a simplicity standpoint. And then now you can build up from that once you get a lot more experience with technical analysis, right? So then this will be the video for you. So if you're looking for something that's going to be super complex, super detailed with a bunch of different indicators brought in, this will not be the video for you. If you want something that's going to be really based around the fundamentals, that's going to allow you to kind of understand this from a fundamental level, also using context of what's actually going on in the market, this will be a good video for you. What I like to do is I like to combine technical analysis and fundamental analysis. That's just me, what I like to do. However, other people are kind of more skewed to either side. What we're going to do is first we're going to start talking about support. The next video is going to be resistance. So it's going to be a 2-video session. And what we're going to do in this first video is kind of give you some context of what is actually going on in the market and what is the actual input that's creating the output that you're seeing on the chart. So first, all market behavior is based on emotion, all of it, because all buying behavior is based on emotion. So there's a lot of mythology of what's going on inside the marketplace. Well, there is no logical reason why a person purchases anything. Every purchase behavior is based on an emotion. So we're looking at the market. People are buying and selling. So then there's a lot of emotion involved. Why? Because somebody has to buy for the sales transaction to go through. People like to say that they're buying things for logical reasons. Really what there is that there's an emotion that is going on inside their head that's making them try to create a rationale for why they bought. So whether you're male or female, in a world, in a country like America that's primarily based around consumer spending, everybody is overly emotional. Why? Because they're buying all the time. That's just a reality. And once you can accept that reality, then you can be a lot more effective, because then you can start to understand what emotions are going to cause people to buy, so I can go ahead and generate some sales. But that's a whole nother conversation. Therefore, we understand that all market behavior is based on the emotion or the buying behavior in the market. So then the question is, how can we kind of understand that to understand what direction we think the market is going to go, so we can make really good options trades that are going to be profitable to our situation? The second thing is that we're looking at a computer generated readout. So the computer is giving us an output. Well, what is the input? The emotion. A lot of people really focus on, well, I have data. Well, what created the data? The data is not more important than what created it. So what is the input that gave you the output of the data? So all the computer can do based on how it's been programmed is give you a mathematical representation of emotion. So when you're looking at this chart, you're seeing a mathematical representation of emotion. The computer cannot express emotion to you. It doesn't have the ability to. It's not intelligent enough. Therefore, all the computer can do is give you a mathematical representation of the emotion in the market. So you really want to understand what is the input that's creating the output, because what a lot of people do is, because of how they've been socialized, they think the data or the output is more important than the input. Without the input, you don't have the output. So then what is more important? So now that we've covered these two bases, what we're going to talk about right now is support. So my definition of support may be different than what somebody else is. This is my definition. This is how I see it. I want you to understand is that I see this as a creative endeavor. So because it's a creative endeavor, it's not about my particular representation matching somebody else's. I don't want you to look at this like it's college or school, right? To where if the person is the instructor, they tell you that it's 1, 2, 3, and you got to repeat back 1, 2, 3 for it to be correct. It's not about that. You're going to have to be trading on your own from a standpoint of you're going to have to make your own decisions as a trader. You're going to be primarily using your own capital until you can get into a position to use somebody else's capital. So you have to learn how to make the decisions on your own. It's not about you parroting or repeating or mocking what somebody else is doing. That's not what this is about, right? Because this is not school system. Therefore, I want you to understand is that I don't endeavor to make you copy or mimic, right, or repeat back to me exactly what I'm doing. So when I'm showing you what I'm doing, it's about you learning the fundamentals and you learning the principles and the concepts behind this, and then you going and having the ability to replicate or express this on your own, right, without having to look at what somebody else is doing to try to figure out what you're getting ready to go do. So when I'm looking at support, what I'm looking for historically is, when I say support, what I mean is that when the market is creating or doing its job, where the market is really a place designed to facilitate transactions. So the market is one big transaction machine. The market is trying to find equilibrium in those transactions, which what I mean is that where do two people agree on a price? When you start seeing a particular share price start to sell off, it's going to hit a point where it's going to sell off at a certain point, and then now it starts to create more demand. So people will agree to sell it and buy it at lower prices. And then once it gets to a particular point, based on a specific reason, it'll start to go up. The question is, where is that particular point? We're going to call that a support. When I'm looking for a support on a chart, whether it's 6 months, a year, 5 days, 1 day, what I'm looking for to me to really footnote that as a support point is I'm looking for 3 incidents of this particular thing going on. And I can kind of show you what I mean in the chart in case you need to see it visually to understand it. I'm looking for 3 incidents over that particular chart pattern or chart time interval that I'm looking at. So we're looking at Tesla, right? Let me go to market. What I'm looking for is my support for Tesla. So at Tesla, what I'm seeing is around this mark, right? Around this, really a 400 in the early 400s right here. This 410 is where it went down, sold off, got bought back in. Sold off around here, got bought back in, then sold off, and they gapped up because you heard the news of the S&P induction. It was getting ready to go into the S&P. So my support for Tesla is around 400, right? A little bit over 400, but we're talking about within a range. What I don't see with Tesla is a lot of support over the 400. Because once we got the S&P news, it just started to get bought into very, very heavily. So I don't have 3 scenarios, right, where I'm seeing it getting sold off into and then bought back in. It just goes back up. It gets sold off into a little bit here, goes back up. So you're not really seeing 3 situations in which we're having this happen. And so what I understand is that with Tesla underneath 800, there is not a lot of support. Now, there may be some support if you're looking at the 5 day or maybe if you're looking at the 1 day, but when you're looking at the 6 months or even a year or even a 5 year, with this move up, there's just not a lot of support. So as an options trader, especially if I'm doing swing trades, if this thing starts to fall, it may keep falling until it can find a new support. Well, where is the new support? Historically, we don't know because we don't really have a representation of it on the chart. So I want you to understand that based on how you're trading, swinging, you're doing shorter term trades, maybe a few days or maybe a day. You want to try to find your support to understand that if this gets sold off, historically, where do people start to buy back into it? And on the daily, you may see a support line over the daily. You may see a support line over the 5 day, over the 1 month. You also may see a support line over the 6 or the 1 year. And you also may not see a support at all. And you want to kind of understand how is that impacting your trading? What if Tesla starts to sell off at 700? Where are people going to buy back in at? Now, we know that they bought it going on the way up, but let's say it starts to sell off. Now, what's the reason why it's selling off, right? And is that reason strong enough to make people keep selling it, right? And then you'll have people want to bring the RSI in and other things like, MACD, the VWAP. Those make sense. But what, like I said, is I combine fundamental and technical. I don't just look at a chart because my question is, if the emotion is strong enough behind it, it'll override all those technical indicators anyway. Like we saw that what happened with coronavirus. The emotion of coronavirus was so strong, all the technical indicators got thrown out of the window. Because I saw people on talking about, well, this particular company's oversold. Didn't matter. It sold off the next day. Well, the VWAP is saying that it should start to get bought into. Didn't matter. Sold off the next day. Why? Because the emotion was so strong behind people being fearful of coronavirus and getting stuck inside a company and losing all their gains. They just kept selling. And it starts to become a chain reaction, which is why they had to circuit breaker the marker and the federal government had to come in reserve. Now, why do they have to do all that if everybody's so logical? This shows you the fallacy in this thinking. Why do you have a circuit breaker on the whole stock market if everybody's so logical? Why do you have one? And why did it get triggered? Right? Why did the Federal Reserve have to come in with liquidity to save the market if everybody's so logical? Why did they have to do that? Everybody's logical. They should have been able to logically understand that, well, this coronavirus situation will be over in a few months, so I don't have to leave my position, because people are not logical. People are emotional. They're not logical. They delude themselves into being logical, right? They lie to themselves and make themselves think that they're logical, but really they're emotional, and they make emotional reactions to situations. So let's go into the next one. So we're looking at Zoom, right? Now, Zoom, a lot of Zoom support on the 1 year is around, I would say this 246 mark, right? I would also say maybe not quite the 200. So I would say here around this 250, they have some support. And then the other support will probably be around this 400. What we're seeing here is this big gap up. Now, the question you want to ask yourself is that, why did you have all this big gap on this particular day? And I think they came out of earnings and they gapped up when they showed that they had so many subs, but they got a lot of subs because a lot of people signed up because of how the government has changed. I'm sorry, how the economy of the world has changed. So we're looking at Zoom. Where is their historical support? So we're seeing some historical support around this 400. Let me zoom out a little bit. Around this 400, right? Not seeing a lot under that, and maybe in this range here. So then the question is, if Zoom goes under 400, where is this historical support? So we may say around this 350 mark, maybe, but I don't really see 3 points. I see 2. We know there's some around 400, but let's say hypothetically, let's say it is around this 350. So where's the next support around the 350? Once if it ever falls, it's probably going to be around this 250 mark, right? So we got to understand is that because Zoom has been really bought into because of people moving to online training, people moving to online education, things of that nature, online meetings, everybody having to do Zoom because of coronavirus. It really rolls up really, really hard. If you look at their 2 year, but then what are we also seeing? It moved up and then it started to sell back off again. So it got around a little bit over 500. It started to sell back off again. I don't want to have this to be a conversation about resistance, so let me fall back on that. So it started to sell back off again. So then it didn't really create a support around this 350 before people started to buy back in again. So the question is, if we see it repeat this behavior where it gets to a point, gets around the 350, people buy back into it, gets around the 350, people buy back into it, then we can say, well, their 350 may be their support. But right now we do know is that there's some support around this 250 and there's also support around this 400. So then we just have to continue to observe this chart. But we know if we get under the 400, we're looking for maybe around the 350 to be another support. If it gets under 350, it may fall all the way down to the 250. So then the question is, if it starts being sold off, what is the reason for that? Because when you're looking at support, you want to ask yourself, what is the price point where if the stock becomes so inexpensive or discounted, people would automatically start to buy into it because they believe they're getting it at a discount? But also, what could be happening in the market where people will not buy this stock, right, at almost any price? And that can happen, right? We saw this, like I said, with coronavirus. If you look at most companies' charts, so let's go back to Tesla, right? Let's go to the 1 year. Let's go to this is March, right? Let's go to the March. This is what Tesla just got sold off at, right? So it just got sold off really, really hard. And you really got to understand that. So let's go to another company real quick. Let's go to Apple. Same thing here. So it got sold off, right? This is around coronavirus hitting. So, but it's Apple though. So why is everybody selling it? So what's the logical reason why people are selling Apple? It's Apple. So why are people selling it? Because it's not logical, it's emotional. And if you look at most companies' chart around this time between February of 2020 and mid to late March of 2020, you're going to see this decline. So you see it really hard on the 2-year. And that's on pretty much every company's chart now. And that's the print of everybody selling off because of coronavirus. So Apple sold off. Well, why would you sell off Apple? It's Apple. Why would you sell it? Why wouldn't you believe that you're getting it discounted? Because everybody was selling. And once everybody starts selling, then everybody starts selling. So then that support was around $61. And then it started to move back up really, really, really hard. Right? Because people started getting more confidence back into the market because we talked about the Fed came in liquidity. So then with Apple, you start looking at their support after this sell-off. What is there going to be their new support line? Because they moved so hard off those old support lines that were under $100. So this is going to be the support. So what we want to do is kind of reiterate what's the concept of the class. First, buying and selling behaviors based on emotion. 2, all this chart can do is give you a mathematical representation of emotional behavior. 3, when you're looking at a support line over your particular time period, what I like to look for is 3 points, right, to where I see selling and I see people buying back into that particular selling. Can I chart that at 3 different points over the course of that particular time period that I'm looking at? Whether it's going to be 1 year, 6 months, 3 months to a day, 5 days, 3 or 4. Your particular support points don't have to match mine. They have to make sense to you because that's what you're going to be trading off of. 5, continue to plot support enough to where it starts to make sense to you and where you can just look at a chart, you can take a line, you can take a drawing device and you can plot your support. And then as you're trading, you can kind of say, well, hey, you know what? If it goes under here, I believe it's going to either continue to fall or it's going to get bought into based on this being its historical support. And it has to make sense to your brain. It's not about you repeating what somebody else is doing because it's about you being able to do this independently based on your own analysis. So this is going to be fundamentals of support for options traders. If you want to learn more how you can take these particular principles and use them to become profitable as an options trader, reach out to me about the highest paid part-time job in the world. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.